With tensions escalating in the Middle East, global oil prices have shot up sharply once again. Before the tensions escalated, global benchmark oil prices were trading roughly around $60 to $70 per barrel. But in early March, Brent crude jumped above $110 per barrel, one of the sharpest spikes in recent years. President Donald Trump has stated that higher oil prices are beneficial for the United States because the country is the world's largest oil producer, allowing it to make a lot of money. So if oil becomes more expensive, does it actually benefit the United States, or does it hurt the American economy? The answer is surprisingly complicated. To understand this paradox, let's first take a closer look at how much oil the United States produces and consumes. Over the past 15 years, the United States has experienced one of the biggest energy revolutions in modern history. Today, the United States produces more than 13 million barrels of oil per day, more than any other country in the world. This means America now produces more oil than traditional energy giants like Saudi Arabia and Russia. In fact, the United States now accounts for a significant share of global oil supply. So at first glance, it seems obvious that if oil prices rise, America should become richer. But the reality is far more complex. When oil prices rise, the biggest winners are U.S. energy companies. When oil prices rise, energy companies earn more profits, drill more wells, invest in new projects, and create more jobs. This is especially important for U.S. shale producers. Shale oil extraction is expensive compared to conventional oil production. If oil prices fall too low, many shale projects become unprofitable. But when prices climb above $80 or $90 per barrel, drilling becomes very attractive. Analysts estimate that the latest Middle East disruptions could generate tens of billions of dollars in additional profits for U.S. oil companies. But that is only half the story. While the United States produces enormous amounts of oil, it is also the largest consumer of oil. The U.S. uses roughly 20 million barrels of oil every single day, making it the largest oil consumer in the world. Oil powers nearly every part of the American economy. And that directly affects millions of American households. Transportation becomes more expensive. Production costs increase. Food prices rise. Consumer goods become more expensive. All of this pushes inflation higher. And when inflation rises too much, the Federal Reserve often responds by raising interest rates. Higher interest rates slow down borrowing, investment, and economic growth. So while oil companies celebrate higher prices, the broader economy can actually suffer. For example, if oil prices rise by $30 to $40 per barrel, gasoline prices across the United States could increase by around 70 cents to $1 per gallon. For the average American household, that could mean paying $600 to $1,000 more per year just on gasoline. And that is only the direct cost. When higher fuel prices raise the cost of transportation and production, the total economic burden becomes even larger. In fact, surveys show that more than 65% of American consumers already expect gasoline prices to rise further, adding additional pressure on household budgets. This is not the first time the world has experienced an oil shock. One of the most dramatic examples occurred during the 1973 oil crisis. During that crisis, Middle Eastern oil producers cut supplies to Western countries. In response, oil prices quadrupled. Fuel shortages spread across the United States. Gas stations ran out of gasoline. Long lines formed as drivers waited hours just to fill their tanks. Another major shock came in 2022, after the Russian invasion of Ukraine disrupted global energy markets. Oil prices surged above $120 per barrel, which triggered inflation across the world. In summary, higher oil prices create a paradox for the United States. On one hand, the country's energy industry benefits from higher revenues and increased production. But on the other hand, American consumers and businesses face pain through higher fuel costs, rising inflation, and slower economic growth. In other words, while expensive oil can make America's oil companies richer, it can also make everyday life more expensive for millions of Americans.